Welcome to Kasa Chronicles with Keyaffa Carter and Karinna Galla. Are you ready? Let's get into it.
Hi, Karinna.
Hi,
Guess what, everybody?
We're back after a while.
I know y'all missed us. I know you guys missed us, but we are back and we want to say thank you because we've gotten a lot of views. So yeah, thank you guys so much for supporting us and watching the podcast. We really appreciate it. So, we just ask you guys to continue to support us, and we are here for you if you have questions and things of that nature. And we're so excited to be back to help you guys with, buying homes in Mexico and telling you anything you need to know about rentals and, property and all of that kind of stuff. So how have you been, Karinna?
I've been really good. I've been missing you guys as well. I'm so happy to be back with you, and I'm so excited about starting with this new season of Kasa Chronicles, the podcast of real estate in the Yucatan Peninsula. How have you been?
I have been really good. I've been really good. I think that I'm just excited to get back started with this. I've gotten a lot of people who have called me, since we've been gone, just asking me about, buying homes and property in Mexico and then also rentals. So, I think that people are still curious about, what it takes to buy homes. So I'm just excited to get back started with the podcast, to be honest. So, and I'm so happy to see you. I missed you too.
Yeah, me too. I hope we can get together anytime soon before the end of
I know. I hope so. Yeah, hopefully we'll be able to get together soon. So, but we'll keep you guys posted if we are able to do that, because when we did the podcast together, that was fun.
It was fun.
And I think, it's gonna be by the end of this season. So you guys have to subscribe, like, and comment and share, and everything you can do for supporting this podcast so we can get together and give you the grand final of this season. We don't know when it's going to happen, but maybe we can do it together.
That's for sure. Yes, definitely for sure. So yeah, I'm so excited because today we are going to talk a little bit about loans. I have a lot of people, and most recently, we've had a lot of people ask us about, can we get a home in Mexico by financing, and can we get a loan in Mexico? So, that's a very big question that, a lot of people have. So a lot of topics around, loans and how it works. And, I'll just say before we hop right into it that for people who are coming from the US, it's very, very, very similar. It's not much of a difference. I will say that, of course, some things are different, but it's very similar. So yeah, we'll just hop right into it. I think that I would say that we're going to just hop into a few things that you're needing to do in order to get a loan. And the first thing we'll start off with is now credit history is a factor. So just like in other countries, Mexican banks also will request a credit history report as well. So they're going to want to know, what your credit is like. If you're trying to get a loan here in Mexico, and they're going to pull that score as well. So, hey, Karinna, did you want to kind of have some thoughts on that for us?
For this matter, it's very important to have at least a 680 score. That's the minimum one that's going to be required for you to be considered as a subject of credit, if that's correct. So consider to keep a healthy credit score.
Okay, yes. So very similar to the US. I will have to say I've noticed maybe one difference, and then you can correct me if I'm wrong, Karinna, but in the States, if the score is not really good, then there are other options. We have a lot of different finance companies, a lot of different lenders who will work with people who have low scores. Now, I don't know, maybe you guys do something like that for the locals, maybe, but I know they have different programs and things in the States. There was one guy that I knew, he had a low score, him and his wife. And so what they did was the lender was listen, if you take these courses, they had to take so many hours of home ownership courses. And then they got instead of having to put the 20% down, they only had to do 10%. And then they had to do like something else, but they had like different programs, you know, and then their credit score only had to be like I want to say it was like a 600 or somewhere around in there in order for them to get it. So I will say that that's something that they offer there. Now here, is it true that you just have to have like a really good score and they don't have those type of programs for foreigners?
No, that's something very important to consider because, first of all, as a foreigner, you can access to a Mexican loan, but there's certain requisites besides the score that you have to meet. First and the most important is that you have to be a permanent resident. If you don't have the permanent residency, then it's going to be a little complicated for you to get access to a Mexican loan. Of course, there's going to be another options that we are going to address later on this video. But the first requisite you have to consider is to have a permanent residency. After that, you will also need a taxpayer number, which is called RFC in Mexico, RFC. So with those two requisites, you are almost on the other side. Of course, you're going to have to meet certain other criteria for you to be allowed to have a loan here in Mexico with a Mexican bank institution. But those two things are the most important. So if you don't check those boxes, then stay with us because we're going to address the other options that we can have for you.
Okay, gotcha. Okay, that's really good information because I get that question a lot too. So yeah, thank you for that information. All right, so the next thing we're going to talk about is we're going to need proof of employment and proof of income. So the banks are going to request your proof of employment. They're going to want to know, you know, where you work. They're going to want to know, you know, your income, you know, how much you're making. You may have to give like your check stubs, your tax returns, or other financial statements that you have. Like if you're self-employed. So of course, in the US, it's the same. You know, I know that like the biggest, I will have to say the biggest, I guess you could say thing that I would have to say that Americans get confused about when it comes to buying in Mexico is just they think that you know the homes here are less expensive, and so therefore there aren't going to be like income requirements or credit score requirements, and it's just not the case. And that's also not the case when it comes to the prices of the homes. Now the prices of the homes are much better than in the US, I will say that, but you're not going to come over here and find a house for $50,000, you guys, and you're just not. That's not, maybe in the past at some point, but since I've been in Mexico, it's not going to happen. You're not going to find like a nice home, you know, that you're going to want to live in for $50,000, you know. So you're going to have to like provide that proof of payment. You have to be working. You have to show that you have a stable income because these banks want to know that you can pay them back. So yeah, Karinna, did you want to add on to that?
Yeah, that's a little something I would like to add to this. During the subprime crisis here in Mexico, we didn't have like big consequences because the Mexican banking system was, it still is, very robust. So while in some other countries they would be lending you up to 115% of the house value, here in Mexico you would never get that. I mean, as an average, the maximum a bank would ever give to you is going to be between 80 and 90%. So that's something that makes it a little more safe for the whole entire banking system. So consider that. And besides that, for you to prove the income, you have to consider a ratio between 1 to 3. I don't know if that's the correct way for expressing me. Correct me if I'm wrong, but consider that the whole amount you are requesting, you're going to be paying more or less 1% per month. So for you to be allowed a loan, you have to be making at least 3 times what you are going to be paying in your monthly fee. So I don't know if I'm saying it in the right way or making it understandable. If not, please interpret it for me.
It makes sense. Yeah, it makes sense.
The idea.
Okay. Yeah. Okay. So yeah, that makes perfect sense. So, you know, basically your payments are going to be monthly about 1% of the loan, which has to be at least, but you have to be making at least 3 times that amount per month. So yeah, that makes perfect sense. Okay. Yeah. And I don't think that that's too far off from like a lot of other countries. So they have to know that you're going to be able to make those payments. So just keep that in mind. And let me see here what we have next. So the next thing we're going to talk a little bit about is the down payment. So yeah, you're going to want to make your down payment, of course, just like, in other countries. So like she said, the banks here will typically lend you up to, what did you say, like 80 to 90% of the total property price. And so just keep in mind, that means that you're going to have to put down at least around 20%. So be prepared to have at least that 20% or whatever that percentage, may be of the property price. That way you can cover the down payment, and then you can cover like closing costs and things of that nature. And yeah, so I don't know. So Karinna, I don't know if you want to talk a little bit about, like, does this vary from bank to bank, or kind of how that works a little bit?
It is not like properly regulated by a certain state institutions, but it's an average. So of course, there's going to be a lot of factors that may restrict your credit capacity. So the minimum I would consider for having us to give us a down payment would be 20% plus closing expenses. So don't ever forget about the closing expenses, because sometimes people think that it's a total price or the expenses are going to be covered by your loan, and it is not true. So you need to have it in mind and be prepared with money, because there's sometimes that you can have this bad surprise when you're already signing and you're happy and about to get in your new house, but then you have to pay extra 10% in closing expenses, and you were not prepared, and probably you were not informed, and those are surprises we don't want to have. So it is better for you to have, besides the down payment, at least around 10% for closing expenses. And if you're going to pay less, of course, you're going to have this information long before the closing date. But if it happens that you didn't receive the information, you are already prepared with at least 10% for the closing expenses. Of course, we know it's less, but it's better to have these good surprises that you have to pay less, instead of the bad surprise of you having to pay more. So be prepared with at least 20% of down payment plus your closing expenses.
Okay, sounds good. When they pay that though, do they pay the full like 20% upfront, or is it like half now and then half later?
It depends on the negotiations the buyer makes with the seller, because sometimes, I mean, this is not regulated, so it's not something that it's written in some legislation, and it states that you must give 10% now or 20% now. It depends on the regulation, and there's many factors that can determine that, starting with who you are buying from. If you are buying from a developer, probably they already have a certain requisite sets before, like a 20% down payment or whatever. Of course, these situations are always negotiable. Everything's negotiable in this life but death. And we don't know yet, probably it's also negotiable. So if you are purchasing to a particular, or to a person, I mean, an individual, so it's easier to negotiate these down payments. I've had clients who've given 5% down payment, another one's 50%. So there's a lot of factors that are involved in determining this amount. So what's usual is to give something between 10 and 20%. So let's say that your bank is going to cover 60% of your loan. So of course you have to be paying 40% from your own funds, but it doesn't mean that you have to give it upfront. So at the very beginning, when closing the deal and having the promissory agreement, you can give 10% or put 20% down, but I wouldn't recommend to have any larger amounts put down before having the final deed. So consider about 10 to 20% upfront when signing the promissory agreement. I think we've already talked about the sales or purchase process in the season 1 of the podcast. I can't remember which one it is, but of course we're going to leave it in the description.
Okay, awesome. Sounds good. All right. So yeah, okay. That is great to know. So another thing we're going to talk about is now legal documents. So when it comes to the legal documents, it's just going to be things like, the title deeds, appraisals, any kind of purchase agreements and things like this is typically something that we provide for the customers. For the clients, right, Karinna, if I'm not mistaken?
Yeah, of course. Talking specifically about the seller and the property, they will have to provide certain documents
Yeah.
for the bank for them to approve, because having a loan is always a good filter for purchasing a property, because they are going to watch all the legal background. So you're going to have like an extra layer of I don't know how to call it, like judicial security. I don't know if that's correct, but like legal security, for calling it somehow. So besides that it is on the seller side, you will have to provide certain documents like the ones we've mentioned before. Of course, your valid original ID. If you're already, well, of course, by this time or at this point, you have to be a permanent residency. So you will have your CUR, which is the population number, your RFC, which is the taxpayer number. Probably they are going to ask you for the certificate of birth and certificate of marriage, just for proving that you are free to sign without your spouse, or if your spouse have to sign as well, then that they are going to sign. What else? The proof of employment and the proof of income, and of course a proof of address. So I think that's pretty much the general information they are going to request, but of course every bank is going to have different requisites, and they are going to be defined first according to the bank, and second according to the situation, to the specific situation of yours. So take this as a general panorama, but not as a definitive one.
Okay, got it. All right, thank you. That makes perfect sense. Okay, so we're kind of also going to go into just like some other options for you guys, some alternatives when it comes to financing. There is also developer financing here. So some real estate developers do offer financing directly to the buyers. So that is possibly another option there. And they'll do this regardless of, your residency status. And, sometimes they can have, more flexible payments. So they may be able to work with you in terms of just, tailoring those payments specifically to, what's going on as far as the home that you're purchasing. Now, is this something that is common, Karinna, or is this something that's not as common?
It's more common in Quintana Roo, for example, in Riviera Maya, since the amount of foreigners purchasing here is larger than any other state in the peninsula. They offer certain flexibility for foreigners to access to a self loan, or I don't know how to call it, but let's use this. Let's use this an example. There's one developer in Akumal, and they are working on a pre-sale, which you already know we're not very happy to work with. But what they are offering is when they deliver the property, you have 5 years for paying it, and they are going to give you, I think right now it's a 9.5 annual rate. I know it might sound expensive for most of you guys, but here in Mexico it's a very affordable rate, because currently the official rate is around it's 10.25 if I'm not wrong. So I know in other countries it's always around 5-6%, but I mean the requisites are lesser, and the loans are regularly for 5-7 years. So you're not going to pay that much interest in it. You're going to have access for a basically new property.
Okay, nice. That's a really good other option to have. Okay, all right, sounds good. Yeah, I'm not. I know in the U.S. specifically speaking, they don't have this option at most places, which I feel like if we did, that would help out, people a lot, So okay, so then we also have private lenders as well. And so private lenders, they can also offer alternative financing. And sometimes they have more flexibility as well in their lending criteria. And they may be willing to work with you if you don't meet the standard requirements of traditional banks. Now, how reputable are the private lenders, Karinna? Or have you worked with them before?
Not really. I I wouldn't recommend them because they're going to be much more expensive than a regular loan. Of course, if it's your last option, then I mean, probably you will have to take it. But I find them particularly risky, because I've seen in Campeche, for example, long ago, there were like different, not like exactly banking institutions, but some corporations that got together, put some money in, and they were lending money to individuals, and suddenly they disappeared. For the people who purchased a property through this schema, it was very complicated to set the liens free. I don't know if that's correct, but when you purchase something through a loan, the bank actually is the one who belongs it to. It belongs to the bank. So when you finally paid it completely, you will have to make a paperwork for having it completely free and under your name. But how are you going to do it if the bank doesn't exist anymore? So I wouldn't take these particular lenders as an option, but it's good to know that the option is still there.
Yeah, that is good to know. So yeah, I would say if you're gonna go that route, it can be risky, is what it sounds like. So you just have to be, use your judgment and just tread lightly. Just be very cautious. Make sure that you vetted them well. But this is not something that is common or anything that like she said, we would possibly recommend for you. Unless it's like, a private lender that you're very familiar with and, they have a good reputation or something like that. Me personally, I like to go by word of mouth. And referrals. So if somebody refers me somewhere, and I know that it's worked for them, I feel better about it than just kind of going with just like a random private lender that I know nothing about. So, but that is another option, just in case you wanted to know about some, another option that you would have. Now, another option, which I thought was very interesting, is the home country financing. So depending on your home country, you may be able to secure financing through a bank or financial institution in your own country. So I thought that was pretty, interesting. I thought that was cool. I personally have never, in the states where I'm from, I've never known the banks there to offer that. So I thought that was like a really good option. So if you do live somewhere and they offer the lending, and then they already know, okay, well, you bank with us and, you've gotten along with us before, you have a good reputation, we'll go ahead and lend you the money to, purchase in Mexico. I think that's a really good option. Do you have any thoughts on that, Karinna, or any experience with that?
Yeah, recently it's been happening a lot that a lot of our clients, especially the ones that are coming from the States or from Canada, are refinancing their homes back home, and they're getting this money and bringing it to here. So with the money they used for let me rewind. With the money they got from refinancing their homes, they can purchase something else here with a very lower rate. So that's another good option. Another client that recently purchased with us in Playa del Carmen, he actually got a personal loan. And personal loans are mostly much more expensive than any other kind of loan. He got it for a 5% rate. So it's amazing. It was amazing because even with a high rate back in his hometown, he got an amazing rate for a property here in Mexico. So the process was super smooth because in the end he purchased here in Mexico without a loan, technically. So by the moment he purchased and he signed his title, it was like a own resources, like he already had the money in the bank, so he didn't have to go through the loan situation because he already had it from the personal loan in Canada. So those are things that can work. I don't know if there are restrictions in your hometown or from your banks, but in the end, if it's a personal loan, probably they will not care what you do with the money. So that's another option that I would place in first place if you don't have your residency. So that would be the most recommendable and the less risky one. What do you think about that?
Yeah, absolutely. That's the best That is the best. Like, we've seen so many people coming over here from the States. Like she said, they refinance their home and then they use that money to come over here to purchase. Then, of course, you have those people who just sell their home, of course, and then they use that money to come over here and purchase as well. That's going to be the best option, in my opinion. And, we see that very often. And then it's like you're comfortable, because if it's your first time buying land in another country, you're comfortable because you already know your banker, you already are familiar with the process, in your home country. So, it's just, a much more comforting, I guess you could say, process. So I like that option. I'm with you, Karinna. I think that that's probably my favorite option as well. So yeah, most definitely check out that option.
The cheapest and the fastest.
Yes, exactly. That's what we like.
Yes, we like it more.
Cheap and fast.
Exactly. So,
Okay, so yeah.
What else we have?
Okay, and then we talked. The last one we have here is just the balloon loans that I have. So yeah, with the balloon payments, that's something that I'm familiar with myself. But that's basically where they lower your monthly payments for you just to make it affordable, so you can actually get into your home. But then, towards the end, you pay the remaining balance in like a big lump sum, and that's what you call a balloon payment. So, that's something that is also an option for non-residents in Mexico. So, the terms may be different and it could vary among lenders. So, what are your thoughts on the balloon payments?
I find them very expensive and not the most convenient option because they have, at least the company we've worked with has different programs for people, no? So, for example, you have to start paying between 3 and 7 months before being able to use the money. So let's say that, and plus you have to give the down payment to the bank. So the seller is not going to receive the down payment. You're going to send it to the bank. And then after that, after you've signed the contracts and all, you will start having to pay between 3 and 7 months, the regular monthly fee, until you are allowed to use the credit. So they want to, since you're not, I always call it that is the credit for the unwanted, for those who have a low score, or for those who cannot prove income, or for those who have no residencies here. So those are the unwanted for the Mexican banks, So they want you to prove that you're going to be able to pay the fees without being a risk for them. So they will ask you to pay several months before you are given the entire amount for you to purchase the home. But for that, you have to have already all the documents from the house. So there are not very many owners that will allow you or that will agree to have these circumstances, because in the end, the seller is not receiving anything until the very last moment when you're finally signing the title. So, it applies for very specific negotiations. You need to have a very flexible owner. Probably if you're already living in the property, if you're paying rent for that property and you have an agreement, your leasing agreement plus a promissory agreement, so probably that can be a good option for you to access to this balloon financing. It is expensive. Oh, my dog is about to bark. Sorry. It is expensive because it increases every 6 months, so they don't have like a fixed rate. But if you're planning on paying it within 5 years or so, it's not going to be very harmful. So yeah, that wouldn't be like the first option either, I would recommend, but it's also an option. So what we are trying to give you here is, the pan of options you will have for accessing for a credit in case you want to purchase a property in Mexico, specifically in the Peninsula de Yucatan, which is the area we cover, and the options you have if you don't have a permanent residency.
Okay, gotcha. Okay, well, I think that pretty much sums it up on the different financing options. Of course, everything that we're telling you is just, it's really an overview. So, if you are interested in one option or the other, just let us know. And we're here for you. We're more than happy to help you explore your options. If you have a particular credit score and you just kind of want to know what we think, then feel free to just, reach out to us. It never hurts to just reach out to us and just ask, because you just never know. And then, with me being a real estate agent myself in Georgia, I always, would tell people, just friends and family and everyone, listen, you may not have the credit score right now, but you can still call me so that I can at least put you on the trajectory of the right path. So that once you get to that score, then we can move forward with a home. So it's just like if you're working on your credit score or, your income or whatever the case may be, then that means that maybe in 6 months you'll still be able to, buy a home. What are your goals? Is your goal to buy a home in 6 months? Is your goal to buy a home in 1 year or 3 months? Feel free to ask the questions now so that you can prepare for that time. And then when that time comes, all you have to do is say, hey, Karinna, what's up, girl? I'm ready to buy a house. And
and then we only have to sign.
Exactly. And then listen, we got you. Like, just let us know. We got you. Okay.
And also, it's very important for you to know that we have contact with, I don't know if you call them mortgage brokers, but there's certain specialized people that works with most of the bank institutions for you to have the best option for you. And we can recommend you with some for understanding what your situation is, and she's going to recommend you the best option for you. And then she's going to give you a strategy for you to be able to purchase in certain amount of time. So, as Keyaffa has said, take care of your credit score. Especially, if you buy something with a credit card, pay it as it should be paid. And yes, start making some savings for the down payment.
Yes, absolutely. And then reach out to us, you guys. Thank you so much for tuning in. We really appreciate it. Make sure that you like and subscribe. Make sure that you share this video because a lot of people you would be surprised. A lot of people are thinking about moving away, no matter where you live. A lot of people are thinking about moving to Mexico because it is so beautiful and the people are so friendly. So make sure you share the video. But yeah, I think that's it for me on my end. Anything else that you have for us, Karinna?
No, thank you. It was such a pleasure to be here with you again. Here in the distance, but here in the end.
Exactly.
So, thank you very much. Thank you all for having tuned us and stay tuned again. Oh my God, my English is broken. And just be sure to like and everything and to follow us and to stream as much as possible and just stay in touch with us.
Yes.
Thank you.
Stay tuned. Bye.
Bye. Woohoo.